hybrid, and liquid. Of course, equity mostly linked to this market, debt linked with mostly the fixed government securities. Hybrid is a balance of both equity and debt, and liquids are purely money market funds or similar things, which are actually, say, the more major categories which are available. Of course, there are other things also. Many people don't know it. There is an option of a direct versus a regular plan, a growth versus a dividend plan, a dividend payout versus a reinvestment plan. I'll tell you in brief about all these things. What are these three parts: direct, regular, growth, dividend, dividend payout, and reinvestment part, of course. So in the direct versus regular plan, most of the times if you are investing through a fund advisor, he will invest in a regular plan. But if you are doing it yourself online, it will be invested. It can be in, of course, in a regular plan if you specify the code of your RIA, the registered investment advisor, or maybe you're a fund advisor. So the commission goes directly to him. But if you're directly, you can say, investing on your own, it makes sense to go in the direct mode only. There is no intermediary involved. You are directly managing it. Of course, you need to have the acumen to select those funds. The biggest advantage is direct have a lower expense ratio, and of course you get more value on your investment. So of course those regular plans have a lot of commissions being paid. Even if the commission is 0.5 to 1%, it makes a huge difference. 0.5 to 1% may seem very small to you, but it is a huge amount in the mutual fund industry. And of course, if you're going through an advisor who is investing on your behalf, he will surely choose a regular plan. So then the growth versus the dividend option, people want their money to be reinvested. Whatever the money is there, it is reinvested into the fund. It is known as the growth option, where the capital appreciation is accumulated in the NAV itself. So once you see the principal amount 20,000, today the maybe after 1 year, 2 year, 3 year, 4 year, whatever, depending on the fund, the value is 35,000. But in a dividend option, you get a payout at the frequent intervals, 3 months, 6 months, 1 year, whatever the time period is specified. So people who want regular income, their principal amount still remains the same. They have a dividend payout. And of course, those who want a stable income flowing in, they opt for this option. But not a very good option because the compounding does not set in. You can't have an advantage of the same. So it is always better to choose the growth option. Then the third thing is dividend payout versus reinvestment. Of course, similarly related to growth versus dividend only. The dividend is the amount which is accumulated. It is paid out. And in the reinvestment, the dividend is declared, but it is reinvested in the scheme as additional units only. But once you choose the growth option, this option is automatically ruled out. So, of course, people believe in tax harvesting. They try to take out ki LTCG lagna hai, kuch lagna hai, to ek saal ka gains nikal lo, which is practically not a good advice if you're looking for a long term. If you're looking for long term, you would be looking at compounding. You're growing your money growing interest on interest. That is the practical one-line definition of compounding. So what exactly it does mean is that compounding in the first 5, 10, 15 years is pretty straight line, linear, and boring. Sometimes it doesn't take off, but once it takes off like a rocket. And you even don't know when the amount starts flowing into your bank account or your, let's say, AMC. So the points to note is that NAV of different plans, G plan, D plan, R plan, D plan, you can say. So these NAVs are different, but the primary thing underlying is it a growth option or is it a dividend option? Is it a regular plan or a dividend plan or a direct plan? So those things make a lot of difference in the you can say hands of the investor. Of course, these options have to be decided prior to investing of the fund. Now, this is one thing you have to choose कि आपने fund का नाम choose कर ले, उसके आगे options क्या देने. But let me go back one step and give you how to choose that fund. अब आपने fund choose कर लिया, let's suppose ABC fund. अब उसमें आप खुद चाहते हैं हाँ ये फंड मेरे को, मैंने इसके बारे में रिसर्च कर लिया है, मेरे को डॉक्टर कुलदीप ने बताया था, मैंने इसको फंड को रिसर्च किया, मेरे को अच्छा लगा फंड, मेरे को इनका सारा कुछ सेटअप अच्छा लगा. व्हाट इज दैट सेटअप? आई विल बी गिविंग यू इन द फॉर्म ऑफ टिप्स टुडे. सो मुझे अच्छा लगा, आई वांट टू गो अहेड विद इट. नाउ वंस यू गो अहेड, इफ यू लिसन टू मी, यू विल गो विद द डायरेक्ट ऑप्शन फर्स्ट, then you will choose the growth option, then you will choose the long term horizon. Those are the three pretty basic things if you're looking to invest for the long. And mutual fund is one, you can say, industry that thrives on the long term. The problem is people panic, and people panic big time. Luckily thing is I was reading today evening only 18,400 crores of SIP mutual funds have flown in the month of May. Although the market has been pretty volatile, it goes 500 points up one day, 1,000 points down another day. So it is going to be like this till Diwali at least. So that is what we are expecting. Of course, nobody can predict it. Only God and I can do that. And of course, I'm neither of the two. So let's decide upon how to pick up your piece of pie from the big cake of mutual funds. So one of the biggest challenges, you can say, there are a lot of mutual funds to choose from. I told you more than 40 MCs, more than not 1,000, even close to 1,500 funds, more than 2,500 schemes. You are actually spoiled for choices. How to create a winning mutual fund and create a winning mutual fund portfolio. Of course, I'll be giving you a few tips that are going to give you a lot of insights into today's session, of course. So why mutual fund? We all know that low cost, reduces risk, improves customer satisfaction, improves quality, range of schemes, convenience, and of course, transparency. You can monitor everything. Yes. So tip number one, historically, good funds have given good past performance. But yes, you can say Rohit Sharma or Shreyas Iyer wali ad aati hai na, past record is not an indicator of future return. But yes, there are funds which are existing since 1993. I'll be showing you a few of those. So, but most of the times, if they have been through the ups and downs and they're still surviving and giving a handsome return, so they are supposed to, you can say outperform in the longer run, of course. So tip number, you can say associated with your tip number one, long-term part. One of the good funds has been Franklin India Prima Fund. Of course, the returns, it has been in inception since 1993. This is the regular fund which I'm showing you. The direct funds actually came into being from 1st Jan 2013. If we look at the direct fund return of the same fund, it will show from 2013. But to show you a regular fund, it has been in business for close to, you can say, 30 years. 30 years. See the amount of return, 13,000% returns. Actual annual return, 18.63. In its category, the category average has been 15.81. In the same category, it is slotted into. So it is performing below the index, above the index, more than the category average. What else do you need? Of course, you don't look at the previous 6 months figures. The markets have been volatile, and this will be the picture pretty much for almost all of the mutual funds. So, of course, in the previous few years, the funds which are volatile more. So this is one example of the longevity. Now, this fund does not fit all the criteria that I'm going to give you. So try to understand what I'm trying to say. This fund fits in the old category that yes, it has been giving a good return than the average and other returns. Now look at the second tip or second criteria. So it is not just the returns, but the consistency of returns. Of course, consistency means 13%, 14%, 15% CAGR, and not that other fund has generated 5, -4 or 47 over 3 years. एक साल में ज़्यादा दे दिया, एक साल में बहुत ही कम दे दिया, बहुत ज़्यादा दे दिया. It should be a consistent one. You can have a range of 1%, 2% plus minus. That is absolutely understandable. But somebody giving you 5, -4 and 47 is actually not a consistency. You make a century in a first match, and for the next 4 matches in the series, you get out on a 0. That is actually not a good sign of a consistent batsman in a cricket. 100, maybe a 0, then followed by a 60, maybe followed by a 40, maybe followed by a 25, will still give you a good semblance of a consistent batsman, and you will have your average close to 45, 50. And that is pretty much a good average. So this is the reason all the equities are known to provide minimum 11 to 12% return minimum. Above 12 is the benchmark usually, because the index has been performing above close to 13 to 14%. 12 to 14% has been the return in the past 30 years. Consistent funds tend to be more predictable and not unpredictable like the numbers I've given. So one of such funds is, of course, Prague Flexi Cap Fund. It has provided consistent returns. And for, you can say, a brief period, 6-month period, why it is, see the rank also. rank within the category. It has always been one of the top ranked funds. So why it is there? Because there were issues with the SEBI in the month of you can say with related to foreign investment of Prague. The SIPs were closed. The indirect investments was closed, in that the old SIPs were continuing, but the new SIPs were abolished in the month of January and February 2022. So this was the reason people could not invest. So this is the reason it fell down. But after that, it has picked up, and it is currently also in the top 3. So this is a sign of a consistent mutual fund. So people who have done, you can say, their financial portfolio analysis with me, FPA, they have this. Even I have this in almost all my family portfolio. So this is one consistent fund which has beaten the index by a good margin and is tending to give you a positive return. Even since its inception, since the past 9 years, close to 400% returns. What else do we need? Then tip number 3, another important facet is how it does fit into your long-term selection plan. Of course, the fund has to be best for you in terms of returns, risk, liquidity, and tax efficiency. But if it does not meet either of the two, then it is a bias selection. Then that is the reason I have looked at, when I do a financial portfolio analysis with colleagues, I've looked at various portfolios which have 12 funds. This year I have 12 mutual funds. Kitne hone chahiye? I said good enough. His number is 4, 5, 6, 7 max. टीवी पे बोलते हैं वैसे म्यूचुअल फंड उतने जितने आपके बच्चे. Means if you have 2 kids, 3 kids, the mutual funds need to be that much in your portfolio. But then to hedge out various things, 4, 5, 6, 7 is a good number, not more than that. But that guy was having 12 mutual funds in his portfolio. Fair enough, still okay, done under the guidance of a financial advisor. But then, what was the stark thing? All funds were Reliance mutual funds. Of course, now Nippon. So 11 out of those 12 mutual funds were Nippon mutual funds. I said, is it your portfolio or Nippon's portfolio? As far as I know, as per my limited knowledge, Nippon small cap is still one fund which is in the top 5, top 10. Other than that, I don't see any Nippon or Reliance fund in any of the categories. Then why 11 funds out of 12 in your portfolio? Probably related to the investment advisor's interest. That is the difference. So just compare the funds. I'm going to give you the return-wise, star rating. Of course, CRISIL rank plays an important role when I compare the funds. What is the AUM size, assets under management? So this is the list of funds which have been giving consistent returns versus, you can say, risk factor. Of course, once the CRISIL rank is good, it guards against the safety factor also. And see, if you see, you can see almost all the quant funds in there. Quant tax plan, quant active should also be there, quant focused, quant large and cap. Again, one of the very good fund houses, quant mutual funds. Again, one of my favorite funds, those who invest with me, of course, take my guidance. I always keep quant fund in their portfolio once or twice, or 1 or 2 funds out of that, any of the 2, depending upon this. Of course, again, another one of my favorite is PGIM India Flexi Cap Fund. Again, one of the very good funds which has a good ranking and a good return. Another fund which is my favorite is Idbi India Top 100. Of course, I say Prudential Blue Chip is also a good fund, but so many funds out of this may not be showing you on the top, but at least in the top 10, top 15 list, a few of them are my favorites and in my portfolio. Navi also finds a mention in there, IIFL, but these guys, have to prove them in the longer run before I even venture into it. No doubt Navi's returns have been humongous, have been impressive, but I still want them to have a good track record before I invest. Remember the tip number 2, consistency. So unless they're consistent, I will not advise. Maybe they're giving a good return in the short term, but a fund needs to prove itself in the terms of longevity. Tip number 4, what has been the risk associated? So volatility of the market is pretty much there. You saw with the tip number 1, Franklin Prima Fund, it has been, you can say, down pretty much. So it is not performing in the volatile market. So that is the reason I said it suits to tip number 1 criteria, but it does not necessarily fit into the other tips that I'm going to give you. So if somebody is returning, you can say 14% returns with 10% volatility is better than 16 return with 40% volatility. Of course, you can say at least something is there in that part, which is, you can say, manageable. Of course, the Sharpe and the Turner ratios are also very important. Of course, you can read more about that in my mutual fund series. If anybody is interested, do let me know. I'll forward you the articles. They're available on my website as such, otherwise, under the heading of mutual fund websites series. I shared them in my groups as well. So if you look at those top large cap funds, which have been performing well in the volatile market also, SBI Blue Chip, Mirai Asset India Opportunities, Kotak Blue Chip Direct Plan, ICICI Prudential Blue Chip, and Canara Robeco Blue Chip. Again, Canara Robeco Blue Chip Equity Fund, one of my favorite funds. Again, finds, you can say, in most of the portfolios that I make people invest in. So, of course, I'm naming all the funds which are my favorite, which I name in there. Those who want to take a cue can take a cue and invest directly in that. But then you need to identify your risk appetite, your needs, your goals, which are assessed according to that. It is not a blind investment in there. You need to assess certain other things. So then, is the fund management team consistent over time? CEO, chief investment officer, fund manager, are they changing? Are those the guys who are consistent or not? We recently saw Axis overhauled its own management because of you can say, lalach jo hota hai na, greed. Oh, it creeps in. When you have an insider thing creeping in, that is where the problem comes. So the best fund managers are the ones who have a consistent top management and, you can say, giving returns as such. So have a look at the fund managers of various funds. Why Prague is performing in, you can say, multi-cap funds. Rajiv Thakkar is one of the very good known names. Of course, Nilesh Surana for Mirai Asset, Ajay Tyagi for UTI Mutual. Vinay Bahadia was earlier in Invesco, but changed to Union. Of course, Invesco has been again performing very well, especially the infrastructure fund. So R. Srinivasan, SBI Mutual Fund. For the small and the middle cap, Shiraz Develkar, very well known name. But yes, you know, Axis, what happened to the Axis very recently, last month only. So R. Srinivasan from SBI Mutual Fund, Anupam Tiwari, again from Axis, Harsh Patwardhan, Edelweiss, and Pankaj Debrewal, Kotak Mutual Fund. So these are a few guys who have been consistent and have been giving good returns as a fund manager. So these were 5. So if you want more tips, type I want more in the chat box. So I am waiting. If you are willing for more tips, right, I want more in the chat box if you're watching. Let me see how many people are watching. So let me know. I'm waiting. If you are willing to have more tips, I'm done with 5 tips. If you want more, let me know. I want type I want more. If you're just, you can say, okay, Parul say I want more. Dhagat says I want more. Who else? Who else wants more? Okay, Dr. Chintan says I want more. So let me give you a few more. Of course, mutual funds have a range of schemes, convenience, transparency, diversification of risk. They are professionally managed. The problem is it is very difficult because to convince people, because mutual fund is a slow and steady, disciplined growth process. अब किसी को स्टॉक में किसी ने स्टॉक लिया, उसका तुक्का फिट बैठ गया, प्रॉब्ली चलो आफ्टर रिसर्च लिया, उसका फिट बैठ गया, लक अच्छा था, तो दैट फंड विल ग्रो, यू कैन से ह्यूमंगसली समटाइम्स, और सॉरी दैट स्टॉक विल गो, वो 6 महीने में दुगना हो गया. पीपल से कौन सा फंड दुगना होता है 6 महीने में? सो अगेन इट इज लाइक अ स्टोरी ऑफ ग्रीड वर्सेस डिसिप्लिन. So it is a personal choice. So let me give you tip number 6. Prefer a fund which is based a lot more on process rather than, you can say, a bias of a fund manager, as we recently saw with the Axis Mutual Fund. So of course they are also human. They'll fall prey to greed and prone to errors as well. We all are humans. Of course, Parag Parekh guys were investing mostly in the foreign thing, but yes, they corrected themselves when the SEBI had it, but they picked up. You saw they are recently again back in top 3, even when they had slipped down to pretty much down in the past 6 months after the SEBI regulations. So if the fund manager is having full flexibility कि कितना allocation देना है, किसका exposure किस stock का बढ़ाना है, किस में करना है fund को, that is the reason you can still say a good team at the top does help. So the top asset management companies who are, you can say, having the maximum amount under management, SBI Mutual Fund, you can say 647 crores, HDFC 432 crores, ICICI Prudential 468 crores, Nippon 283, courtesy the buyers fund advisors, you can say. And Axis Mutual Fund 260, DSP BlackRock 1.07 crores. So tip number 7, costs, kharcha. That is most important, and they are really important. They are damn important. I told you 0.5 to 1% reduction in your cost is going to make a huge difference. Trust me, this huge is really huge in the longer period of time. If you are investing for 2, 3, 4, 5 years, it may not seem much difference to you, but over a period of 10 to 15 years, which is not a major time. When we talk of long term for retirement, we can say we are investing for 25 to 30 years. But even in 10 to 15 years, a 1% or a 0.75, 0.5% reduction will make a huge difference. The TER, total expense ratio, gets debited on your NAV daily. आप रेगुलर म्यूचुअल फंड और डायरेक्ट म्यूचुअल फंड का डिफरेंस देखेंगे, उसमें एक्सपेंस रेशियो का डिफरेंस होता ही. Of course, the commission part that is added in the regular mutual funds, that makes all the more reason to invest in the direct, you can say. Even if I am investing on my colleagues' behalf for those who I am doing FPA, I still make them invest in the direct. I am not into going into commission, of course, for that part, but I want them to earn more. That is, always prefer to have a fund which has a higher AUM. फंड बहुत अच्छा है, लेकिन अगर उसका AUM मींस एसेट्स अंडर मैनेजमेंट, अभी आपने लिस्ट देखी SBI का सबसे मैक्सिमम था, अगर वो फंड 600-700 करोड़ पे है तो दैट मींस उसका एक्सपेंस रेशियो हाई होगा. अगर उस फंड के पास एसेट्स 10-12-15 हजार करोड़ के हैं तो देन उसका एक्सपेंस रेशियो बहुत कम हो. It will be impact on your lower on your NAV. So see, there are funds which have, you can say, so much of lower expense ratio, low cost, high return funds. Quant small cap, quant tax plan, ICICI technology direct plan, quant infrastructure fund. These are the funds. Again, see, the fund size may be a little small, but expense ratio 0.62. Quant direct, again, all of these are direct. 1358, expense ratio 0.5. Quant has a very different philosophy which runs all the more different from all the mutual funds, and you cannot directly invest from their website also like other mutual funds. It has to be through a different mode. Of course, matter for some other day altogether. ICICI Prudential 8,000 crores, 0.71. Quant infrastructure, again, out of 4 which are low expense are the quant mutual funds. Can you imagine that? Just see the TER or the expense ratio, which is there always notified whenever you open up a fund. Then monitor your funds. Somebody asked me from my group, sir, आप daily monitor क्यों करते हैं? It should be an invest and forget. अगर आपने long term के लिए किया है, I have to monitor for a few things. Of course, I'm not monitoring it daily. Sometimes I'm monitoring it twice a week or thrice a week. In this kind of volatile market, I'm not even monitoring even twice a month also. I know the market is going through a patch. There will not be hardly any growth. The only thing is I keep on checking whether the fund has fallen below the limit or not. Maybe some exposure has changed, because some fund managers are panicky persons. They react differently. एकदम से मार्केट गिरी, एक्सपोजर कम कर दो, एक्सपोजर बढ़ा दो. जो एक्सपीरियंस फंड मैनेजर होता है, he understands volatility. So that is the reason you need to still monitor it in this volatile scenario also at least twice a month, otherwise minimum twice a week. It will give you a lot of insights. Of course, get the fund fact sheet. अब तो सेबी ने इतने रूल्स फिक्स कर दिए हैं, जो आप इन्वेस्ट करते हैं, अगर आपने अपना ईमेल दिया, ऑफ कोर्स ईमेल, मोबाइल नंबर इज मैंडेटरी अलॉन्ग विद द पैन, सो आपको पोर्टफोलियो एनालिसिस और यू कैन से पोर्टफोलियो डिस्क्लोजर हर मंथ एंड पे आता है. इस मंथ इस फंड ने किसमें किया. अगर आपने म्यूचुअल फंड में इन्वेस्ट किया तो आपको हर महीने मेल आती होगी फ्रॉम ईच फंड हाउस दैट यू हैव इन्वेस्टेड इन. ऑफ कोर्स सबकी नहीं आएगी, जहां पे आपने इन्वेस्ट किया उसका आएगा कि अगर आपने, इन्होंने पहले कहां करते थे, अगर आपने किया, इफ यू वांट टू एग्जिट आउट फ्रॉम फंड, डाइवर्सिफाई, चेंज टू अ सिमिलर फंड ऑफ द सेम कैटेगरी, you are free to do that if you don't like certain things about that. So just compare. You can say I've compared SBI Blue Chip and HDFC Index Sensex Fund. Both are large cap equity funds. Again, both are almost of same age, 9 years and 5 months, but the fund size is hugely different. 31,000 crores and 3,000 crores. The returns are almost similar. SBI is slightly on the higher side. Of course, SBI has a biggest AMC, as I gave you the figures. So this is the way sometimes you keep on comparing these things. Then tip number 9, of course, evaluate the cost of exit before taking an exit decision. Exit load plus liquidity plus taxes, these costs are too high. You have majority funds which have nil exit load after 1 year. एग्जिट लोड का मतलब होता है पहले किसी टाइम पे फंड्स का एंट्री लोड भी होता था. एंट्री लोड कई बार 0.25% होता था. मींस आपने 10 रुपए की एनएवी पे म्यूचुअल फंड एनएफओ खरीदा, आपको 9.75 पे म्यूचुअल फंड मिलता था. 0.25 वाज डिडक्टेड एज अ एंट्री लोड इनडायरेक्ट. इन रेगुलर डायरेक्ट में थोड़ा सा कम था. एंड सिमिलरली आप एग्जिट लोड 3 साल 5 साल 10 साल बाद भी निकालो, एग्जिट लोड होता था. स्लोली थिंग्स केप्ट ऑन इंप्रूविंग. अब एंट्री लोड ऑलमोस्ट किसी पे भी नहीं है. ऑलमोस्ट मीन 99.9% पे नहीं है. बट एग्जिट लोड अभी भी बहुत सारों पे है. बट आफ्टर 1 ईयर majority 99.99 पे नहीं है. So you need to compare the exit load, taxation part also. So equity mutual funds with no exit load, SBI large cap, mid cap, HDFC Nifty 50 fund, HDFC Index Sensex fund. Of course, all of these are, you can say, large cap funds only, which I've given you. The figures are as per value search as on March 16, 2022. So then the tip number 10, the last tip for today. So the most important step in picking the mutual fund is to focus on getting the mutual fund that fit into your needs. आपका गोल क्या है, किसके लिए इन्वेस्ट किया है, रिस्क एपेटाइट क्या है, कितना इक्विटी में एक्सपोजर दिया. आप इक्विटी में एक्सपोजर 20% देके बैठे हो, रिटर्न्स चाहते हो 80%, तो वो नहीं होता. यू हैव टू इन्वेस्ट एज पर योर एज. बट कईयों का रिस्क एपेटाइट नहीं करता. मेरे पे जिम्मेवारी बहुत है, क्लिनिक एक्सपैंड करना है, घर में बहन छोटी है उसकी शादी करनी है, बच्चे छोटे उनके स्कूलिंग का करना है, या बच्चा बड़ा उसके कॉलेज का करना है. आई कैन अंडरस्टैंड, आई एम नॉट सेइंग इट डू इट, बट एवरीबॉडी हैज अ रिस्क एपेटाइट. कईयों का हार्ट भी कमजोर होता है, कहते नई मार्केट नीचे गई तो मेरा हार्ट सिंक कर जाएगा. आई डोंट वांट टू गो इन फॉर इक्विटी. फेयर ना, evaluate the options. So have a mix of equity, debt and liquid, and of course variable funds. You can tweak as per your individual needs, and that is the one thing that I'll advise. So best performing equity mutual funds, I'm giving you a list. Of course, one of my favorites, Tata Digital India Fund. ICL Prudential Technology, one of my favorites. Aditya Birla Sun Life Digital India, one of my favorites. So again, SBI Technology is not in my portfolio, of course. Quant Infrastructure, again favorite. Quant Tax Plan, Quant Active Plan. All of these funds are my favorite, and of course, all of these are in my portfolio in one or the another family member of mine. So these are the best performing equity mutual funds with 3-year, 5-year return figures you can see. Don't look at the volatility that is happening in the market in the past 3 to 4, 6 months. That is absolutely normal for the given situation. So if you look at the best performing debt mutual funds, I'm giving you the list, but I don't invest at all in debt mutual funds. That is a given. I have my own fundas. I believe PPF is the new. I have a PPF. I believe PPF is the new debt for me. I've never invested in debt except once, long time back, 2010-12, but never after that, and never I will do, at least as of now. But this is the list. If you want to pick up as per your risk appetite, your debt mutual funds, you surely can from this list. Of course, balance, for me, balance also is a little bit maybe on the lower side, because I have the NPS, which is giving me a good return over, you can say, as a balanced investment. And जो balance नहीं आता है वो मैं gold से पूरा कर लेता हूँ as a hedging. So again, these both also don't fall in my sojourn, the balanced mutual funds and debt. I will always invest. I can invest in ELSS. I do invest in equity, but I do not invest in balance. But these are again to be chosen as per your risk appetite, because मेरे को लगता है balance और advantage दोनों एक line में नहीं होते हैं. बहुत ऐड आती है उसकी, कोई भी कोटक का या HDFC का. I don't believe much in the philosophy of balanced mutual fund, because NPS is giving me much more than that in that regard. I think that was a huge list. Is it over? No, it's not. So probably there is something more for you if you want some more. So 5 steps to choose the right mutual fund company: stability of the fund management team, stability of the ownership, confidence of the management team, experience of the fund management team, and of course, confidence of the fund management team as well. So how to choose? If you have decided to invest in mutual funds, you have to make decisions. Fixed लगाना है, equity में लगाना है, balance में लगाना है. मैंने तीनों की list आपको दे दी है. Of course, fixed means debt only in this case. So which AMC to invest with? Think deeply, discuss freely with your advisor if you feel he's unbiased. What your objective is, what time period you're comfortable is, what your risk appetite is, what your goals are, of course, objective. So all these things need to be weighed upon. and directly selecting a mutual fund. So always think about these things. So this is the risk hierarchy. As you go on, the risk level increases: money market fund, gilt fund, debt funds, balance fund, and of course, equity funds do come with a risk, but then the return is also like this, only in this order only. The more the return, more the risk, more the risk, more the return. That always is there. So the carry home gyan for today, so the decisions on which fund have to be based on a lot of information which I've given you. If you have a long-term objective like retirement planning, or maybe willing to assume some risk, maybe equity or balance fund would be ideal. If you have a very short-term objective for small time, money for a couple of months, liquid income, then maybe a MIP, monthly income plan, or an income fund that can be recommended. So this is your choice. What do you want out of this list? So once you have decided on the fund, decide on the basis of an AMC. So of course, ascertaining the AMC track record, suitability of scheme, portfolio details, everything is there in the scheme fact sheet, and you can say mutual fund fact sheet, and portfolio disclosure is again, you can say, going ahead with that. So key information memorandum, KIM जिसको बोलते हैं, या डिटेल में SID, these are the documents there. Fact sheet और portfolio disclosure statement हर month आपको आपके invested fund house से आपके mail में जा रही है. अगर आपको नहीं आ रही है तो check your spam, will be there. Otherwise also you can easily assess them at mutual fund website. This is a SEBI regulation and everybody has to maintain them. So intrinsic factors to choose: goals, risk profile, asset allocation as per your age. If you are doing the fund facts, what is the pedigree of AMC, risk return analysis, expenses, and of course frequency of turnover, and of course the management confidence, and all those factors I've given. So the moral of the whole story is they will give you good investment options for all age groups, right from a toddler to teenager to a senile citizen. You can invest with an aim to create wealth for different life stage goals: retirement, child's higher education, vacation planning, property, whatever you want to. It is your, again, that is the reason. Primary thing is first only to select a goal. Select a goal first. Goal ही नहीं पता तो blindly थोड़ा ना invest कर. अगर goal के बिना करोगे तो you don't know when to exit also. You need to have an exit plan before you enter. Remember this part. Of course उसके लिए आप किसी track record अच्छे वाले fund में जाओगे. ये fund इतने साल से दे रहा है, let's put into that. कभी जितना fund पुराना है तो उसका expense ratio higher हो जाता है. उसका fund manager थोड़ा biased हो जाता है. So you have to keep a balance of all these 10 tips that I've given you. But the most important question is, before you start investing, funds that meet your investment objectives. So maybe web series influence do, maybe open ending छोड़ूंगा, maybe more on this in part 3, if your interest continues, of course. So why mutual funds? We all know convenience, expertise, manage inflation. I told you various reasons. So thank you so much for a patient hearing. And this is my WhatsApp community. Now this slide is going to change pretty much soon. We'll have 512 here, and of course the room is open. If you want, I can add more. If anybody was interested in not in my WhatsApp groups till now, you can send me a message. I'll add. So this is my YouTube channel. All these videos go to YouTube, and as you can say, as of 10 June, 485 videos plus already are there on my channel. If you have not yet subscribed, go to my channel. If you forget, just search Dr. Bhavdeep Oja and subscribe and hit the bell icon. Of course, yeah, it has a gold mine of information. My social media presence is all by my name only. Dr. Bhavdeep, Facebook, Instagram, Clubhouse, you can get connected. Please do send your feedback, of course, on the page, on my WhatsApp community, of course, wherever you're watching, or on YouTube, wherever you're watching it. Bookers and Brickbats both would be welcome in equal manner. And I hope it was a value addition to you all in some way or the other. So thank you so much for watching, and I stop myself for acknowledging the visitors on my page where the session is happening live, and of course taking up any queries if there are any. Okay, Dr. Dhagash, hi Dr. Dhagash, hi Dr. Ramchandra sir, hello Dr. Parul, hello Dr. Rajendra Desai sir, hello Dr. Suchi Singh. Yes, I want more. I gave you a few more tips. Yes, Dr. Chintan Access Blue Chip is again one of very good funds, and of course my favorite. So Dr. Dhagash says, thank you for another informative. Thank you, Dhagash.
The US markets have fallen more than Indian markets due to restrictions imposed by SEBI. We are not able to invest in funds like Motilal as well, Nasdaq 100 funds of funds. I would like to average my NAV in that fund, and I'm not in direct stock investing for US stocks. Is there any other option? Also, according to you, what should be the ideal percentage of portfolio allocation for mutual funds investing outside India? Dhagesh, the thing is, I believe SEBI is going to come up with the regulation in that regard pretty much soon, because there has been a lot of influence on the war, which is giving us more of inflation and more of, say, the government is trying to hold on to its money. Earlier, it was giving more money in the hands of the consumers who were willing to spend in the way they wanted. So now the government has, again, say, tightened their noose, and they want, you can say, for the money to stay in there. Yes, because of the restriction, we are not going to go ahead, but I feel they are going to come up with the regulation very soon. So as of now, of course, we can't say ideal portfolio allocation for mutual funds outside India. I believe it should not be more than 10% in any case. Even if you want to have a foreign exposure, Flexi Cap, Prague Flexi Cap was covering most of the, you can say, demands of that. अब इसको भी अपना revise करना पड़ेगा portfolio. But then IB exposure. So, but then yes, as and when the SEBI regulations they will litter down a bit, probably everyone would be able to do that. For balancing out your Nasdaq 100 FOF, hold it for a slightly long term. Of course, I know the lucrative thing is there when the US markets are correcting more, but remember, the foreign investors are running out of India right now. They will come back, and once they come back, there is a amount of huge of averaging that is going to in. Then we will be the sellers and they will be the buyers. So don't worry. It every wave has a crest and a trough. So you will be watching that. So thank you, Dr. Reena. Thank you, Dr. Ramchandra. Okay. Dr. Chintan, I have mentioned the number in the presentation itself. You can contact me and send me a message. I'll add you. Hi, Ananya. Yes, Dr. Reena. Again, I have mentioned my number in there. You can send me a message. I'll add you in both practice management and WhatsApp and finance WhatsApp group. So, hi, Dr. Ajay Gupta. So, thank you guys for being a patient audience, and I hope Dhagesh, your answers were there. You got your answers, and I believe the only thing is which is being delayed is to make a start. And once we make a start, we create version 1. Trust me, guys, version 1 is better than version 9. Once you create a version 1, then only you have a benchmark for the version 2. पिछले वीडियो में, पिछले इसमें मैंने ये गलती की थी, अब मेरे को दूसरे में नहीं कर रही. Version 1 would be once you create 10 versions of the same, you will look back and see at version 1 what it was. You will say, hey Ram, ऐसा मैंने बनाया था, ऐसे मैं काम करता था. Oh my God, how bad looking I was, how many mistakes I made. We are all human. The problem is we are obsessed with perfection. Exact mutual fund मिले, exact return मिले, exact हम अमीर हो जाएं. अगर ऐसा होता तो सारी दुनिया में सारे लोग अमीर होते, गरीब कोई भी नहीं होता. स्टॉक मार्केट में इन्वेस्ट करने वाला हर बंदा करोड़पति होता. So you have to choose perfect mediocrity versus shabby success. And shabby success is going to come only once you go on creating versions which are full of mistakes. And when the mistakes are corrected, you will automatically create a better version of yourself. And of course, in this case, your portfolio. So don't wait for a good time to come. Anyways, it is a good time to invest in the market. But for entering into the SIP mode, there is no right time to enter into the market. Every time is the right time. So if you've not yet started, please start off. That is the off-record carry-home gyan for me, from my side for all of you. It has been a tad long session, of course, close to 45 minutes or so. But yes, I couldn't have rushed it through. The reason I put up a lot of examples, a lot of practical things, a lot of fun names. People who always look out for fun names from me, I've given you a lot of fun names for today. Of course, all of these are research part only from my side. Most of them are in my portfolio as well. So if you find them useful, please do use it. And of course, if I see again an audio interest, I'll be going into the part 3 as well. The next Thunder Thursday session takes place on Tuesday, on a terrific Tuesday. It does not take place on Thursday. It will be preponed. Monday, we will have the regular Miraculous Monday. And Tuesday, it will be a Thunder Thursday rather than a terrific Tuesday session on Tuesday. And of course, for the next week, I'll let you know on the Monday session itself. So thank you guys for watching. And I hope it was a value addition to you. For those of you who are still in the two boats, considering what exactly are the mutual funds and how to go about the mutual funds. And today's session, part 2, should set the ball rolling. Thank you guys. Bye-bye. Take care and have a great weekend.